In the vast and ocean of the cryptocurrency market, the rally of a specific asset is a complex phenomenon, driven by a confluence of technology, narrative, market dynamics, and macroeconomic context. Zcash, ZEC, a pioneer in the realm of privacy-centric digital assets, is no exception. A statement as simple as, ZEC has experienced a significant rally, belies a multi-layered story. This analysis will deconstruct the anatomy of such a rally. Moving far beyond a superficial examination of price charts, we will delve into the foundational technology of zero-knowledge succinct non-interactive arguments of knowledge, ZK snarks, that gives Zcash its unique value proposition. We will then explore the specific catalysts, from technological upgrades and shifting market narratives to the intricate mechanics of capital rotation and supply shocks, that can ignite a powerful upward price movement. Furthermore, this paper will situate a ZEC rally within the broader geopolitical and regulatory landscape, particularly in the context of the global rise of central bank digital currencies, CBDCs, and the ever-present debate on financial privacy. Finally, we will adopt a critical lens, examining the inherent risks and counter-arguments, such as the persistent threat of regulatory crackdowns and the challenge of adoption for its core privacy features. This comprehensive exploration will argue that a significant ZEC rally is not merely a speculative event but a market referendum on the enduring value of financial privacy in an increasingly transparent digital world. Blank. Before we can analyze why ZEC rallies, we must first understand what ZEC is and why it commands any value at all. Zcash was born from a fundamental critique of Bitcoin's design, its pseudonymous but ultimately transparent ledger. While Bitcoin transactions don't have real names attached, the public nature of the blockchain means that all transactions, addresses, and balances are open for anyone to see. With advanced chain analysis, these pseudonymous addresses can often be linked back to real-world identities. Zcash, launched in 2016 by the electric coin company, ECC, was created to solve this problem by offering a choice. Users can transact on a transparent ledger, much like Bitcoin, or they can use its pioneering shielded protocol to achieve true financial privacy. The magic behind Zcash's privacy is a cryptographic breakthrough known as ZK snarks. Understanding this technology is crucial to grasping Zcash's fundamental value. A ZK snark allows one party, the prover, to prove to another party, the verifier, that a statement is true, without revealing any information beyond the validity of the statement itself. Imagine you have a key to a locked box, and you want to prove to someone that you have the key, but you don't want to show them the key itself. Using a ZK snark would be like engaging in a complex series of interactions with the box that only someone with the key could successfully complete. An observer watching you would be mathematically convinced that you possess the key, but they would learn absolutely nothing about the key's shape, size, or design. In the context of Zcash, this is applied to transactions. When you send ZEC from one shielded address to another, the sender's address is hidden. The network doesn't know who sent the funds. The recipient's address is hidden. The network doesn't know who received the funds. The amount is hidden. The network doesn't know how much ZEC was transferred. However, the ZK snark proof that accompanies the transaction mathematically verifies that all the network's rules were followed. It proves that the sender actually had the funds to send. The funds were not created out of thin air, no counterfeiting. The sender could not have double spent the same funds. This is a monumental achievement. It creates a system where the integrity of the ledger is maintained with mathematical certainty, while the details of the transactions on that ledger remain completely private. This powerful combination of privacy and verifiability forms the bedrock of Zcash's entire value proposition. The recent NU5 network upgrade, which introduced the Halo proving system, was a massive step forward, as it eliminated the need for a controversial, trusted setup, making the cryptography even more secure and robust. Beyond the technology, the core narrative driving Zcash is a philosophical one, the belief that financial privacy is a fundamental human right. In a physical world, cash allows for private, peer-to-peer transactions. In an increasingly digital world, where every transaction creates a permanent data trail. This right is being eroded. This narrative becomes particularly potent when viewed against the backdrop of increased surveillance. Governments and corporations have an unprecedented ability to monitor and analyze financial data. Financial censorship. The ability of authorities to freeze bank accounts or block transactions for political or ideological reasons. The rise of CBDCs, central bank digital currencies, while efficient, represent a potential endgame for financial privacy, creating a direct line of sight for the state into every single transaction made by its citizens. In this context, Zcash is positioned not just as a speculative asset, but as a crucial tool for preserving individual liberty and economic freedom. A rally in ZEC can, therefore, be seen as the market placing a higher premium on this narrative. Blank. While a strong foundation is necessary, it is rarely sufficient to cause a significant rally on its own. Rallies are typically ignited by specific catalysts that draw renewed attention and capital to the asset. For a project like Zcash, whose value is so deeply tied to its technological prowess, network upgrades are a primary bullish catalyst. An upgrade is not just a routine maintenance task. It is a signal to the market that the project is actively developing, improving, and committed to its long-term vision. As mentioned, the NU5 upgrade was a landmark event. By removing the trusted setup, it addressed one of the longest-standing criticisms of the Zcash protocol. A rally could be triggered by the announcement of a future upgrade that promises improved performance, faster transaction times for shielded transactions, enhanced scalability, the ability to handle a much higher volume of private transactions, interoperability, new features that allow Zcash to interact seamlessly with other blockchains, particularly in the DeFi, decentralized finance ecosystem. For example, a trusted and efficient bridge that allows shielded ZEC to be used on Ethereum would be a game-changer. Light client support. The development of official light wallets that allow users to use shielded transactions on mobile devices without having to download the entire blockchain would massively lower the barrier to entry for privacy. The anticipation leading up to such an upgrade, followed by a successful and smooth implementation, can create a powerful wave of positive sentiment that translates directly into buying pressure. The crypto market is notoriously narrative-driven. Capital flows to the hot sector of the moment. Whether it's DeFi, NFTs, or Layer 1 alternatives, a ZEC rally often coincides with a broader market shift where the privacy narrative comes back into focus. This can be triggered by external world events. A major financial crackdown, news of a government imposing strict capital controls or freezing the assets of protesters can serve as a real-world advertisement for the value of censorship-resistant private money. A major data breach, a large-scale hack that exposes the financial data of millions, can remind people of the fragility of their privacy in the traditional financial system. Concrete CBDC rollouts. As a major economy moves from theoretical discussion to the actual implementation of a CBDC, the abstract threat to privacy becomes concrete. This can cause a flight to privacy-preserving alternatives as a hedge. During these periods, influential figures, analysts, and media outlets begin discussing the importance of privacy. And Zcash, as a blue-chip leader in the space, becomes a primary beneficiary of this renewed attention. Beyond fundamentals and narratives, the mechanics of the crypto market itself play a huge role in any rally. The capital rotation cycle. Crypto bull markets often follow a predictable pattern of capital flow. First, capital floods into the safest and largest assets: Bitcoin, BTC, and Ethereum, ETH. Once these have seen significant gains, profits begin to rotate into other large-cap altcoins. Following that, capital often moves into more sector-specific plays. A ZEC rally can be a sign that capital is rotating into the privacy sector. Traders who have made profits on other assets may look to Zcash as an undervalued asset with a strong narrative, ready for its turn to run. Supply shock dynamics. The price of any asset is a function of supply and demand. A rally can be ignited or amplified by a supply shock. where the amount of ZEC available for sale on exchanges suddenly decreases. This can happen for several reasons. Whale accumulation. Large holders, whales, may begin quietly buying up ZEC from the open market and moving it into cold storage for long-term holding. This reduces the liquid, tradable supply. Increased shielded adoption. If a significant number of users begin moving their ZEC from transparent addresses on exchanges to private, shielded addresses that they control, it effectively removes that ZEC from the immediately sellable supply. The short squeeze. In derivatives markets, traders can bet against an asset's price, shorting. If many traders are shorting ZEC, and the price begins to rise due to other catalysts, these traders start to lose money. To close their positions and cap their losses, they are forced to buy back ZEC. This forced buying creates a powerful feedback loop. Rising prices force shorts to buy, which pushes prices even higher, forcing more shorts to buy. This phenomenon, known as a short squeeze, can turn a modest rally into an explosive, parabolic move. New exchange listings or products. The listing of ZEC on a major exchange it wasn't previously on. Or the introduction of new financial products like ZEC perpetual futures on a popular platform can dramatically increase its accessibility, liquidity, and visibility, acting as a powerful catalyst for a rally. A ZEC rally does not happen in a bubble. It is deeply influenced by the broader global economic and political environment. The value proposition of a private digital currency is amplified or diminished by events on the world stage. Perhaps the most powerful long-term macro tailwind for Zcash is the global, coordinated push towards central bank digital currencies. While proponents tout efficiency and financial inclusion, critics see CBDCs as a tool for unprecedented control and surveillance. A CBDC is programmable money controlled by the state. It could potentially be programmed to prevent purchases of certain goods, e.g. sugary drinks, gasoline, have an expiration date to force spending and stimulate the economy, be automatically taxed or garnished, be frozen or seized with the click of a button. In a world where the primary form of digital cash is a CBDC, the demand for a non-state, private alternative could become immense. Zcash is positioned as the antithesis of a CBDC. It is decentralized, permissionless, and private. A rally in ZEC can be interpreted as a speculative bet that as CBDCs become a reality, the demand for a private, escape valve will skyrocket. It is the ultimate counter-trade to a future of centrally controlled digital currency. History is filled with examples of citizens in unstable regions seeking to protect their wealth from hyperinflation, confiscation, or capital controls. Traditionally, this meant smuggling physical cash or gold across borders. In the digital age, cryptocurrencies offer a weightless, borderless alternative. While Bitcoin is often used for this purpose, its transparent nature poses a risk. A government could potentially track the funds and target the recipients. Zcash, with its shielded transactions, offers a more secure method for capital flight and wealth preservation in times of turmoil. A significant ZEC rally could be correlated with rising geopolitical tensions or economic instability in a major region, as investors and citizens seek a safe haven that offers both sovereignty and privacy. No analysis is complete without a sober assessment of the risks and challenges. Zcash faces significant headwinds that could stall any rally or represent long-term threats to its viability. The single greatest threat to Zcash and all privacy coins is regulation. Governments and financial regulators, under the banner of anti-money laundering (AML) and combating the financing of terrorism (CFT) laws, are deeply suspicious of technologies that obscure the flow of funds. This has led to several key risks. Exchange delistings. This is the most acute threat. To remain compliant with regulations, major, centralized exchanges like Coinbase, Binance, or Kraken may be pressured to delist ZEC. Some exchanges have already done so in certain jurisdictions. A wave of delistings would be catastrophic for ZEC's liquidity and accessibility, causing its price to plummet. FATF, Travel Rule. The Financial Action Task Force, FATF, has issued guidance known as the Travel Rule, which requires virtual asset service providers, like exchanges, to collect and share originator and beneficiary information for transactions. This is fundamentally incompatible with the design of shielded transactions, forcing exchanges to either disable shielded withdrawals, deposits, or delist the asset entirely. Outright bans. While less likely in major Western economies, some countries could move to ban privacy coins altogether, making it illegal to own or transact with them. A rally in ZEC is always shadowed by the risk that a negative regulatory announcement could erase all gains in an instant. A persistent criticism of Zcash is the low adoption of its core feature. The vast majority of ZEC transactions are still made on the transparent blockchain. Data from block explorers consistently shows that the percentage of transactions that are fully shielded remains in the minority. There are several reasons for this. Complexity. Using shielded transactions has historically been more complex than transparent ones. Lack of wallet support. Many popular multi-coin wallets do not support Zcash's shielded addresses. Exchange limitations. As noted, most exchanges do not allow users to directly withdraw to or deposit from a shielded address due to compliance concerns. This forces users to first use a transparent address, creating a potential link in the privacy chain. For critics, this low usage raises a crucial question: if nobody is using the privacy feature, is Zcash truly fulfilling its purpose? And if not, why should it command a premium valuation? A sustainable rally would need to be accompanied by clear, on-chain evidence of a significant and growing usage of shielded pools. Zcash is not the only player in the privacy space. Its main competitor, Monero, XMR, takes a different approach. Monero's privacy is mandatory for all transactions, using techniques like ring signatures and stealth addresses to obfuscate the sender, receiver, and amount. This mandatory privacy makes its anonymity set, the crowd, a transaction can hide in, larger by default. The debate between Zcash's optional, mathematically perfect privacy and Monero's mandatory, obfuscation-based privacy is ongoing. Furthermore, the privacy landscape is evolving. Other blockchains are beginning to incorporate privacy features using ZK proofs and other technologies, potentially eroding Zcash's unique selling proposition over time. A significant rally in the price of Zcash is a multifaceted event that signifies far more than just speculative fervor. It is a reflection of the strength of its underlying technology, a response to specific, potent catalysts, and a barometer for the market's current valuation of financial privacy itself. The rally begins with the foundation, a robust technological base in ZK Snarks that offers a provably private alternative to a transparent financial world. It is then ignited by catalysts, a game-changing network upgrade, a global event that thrusts the privacy narrative into the spotlight, or the powerful internal mechanics of a market deleveraging through a short squeeze. This entire event unfolds within a macro context where the global push towards surveillance-native CBDCs creates a powerful, long-term tailwind for private alternatives. A ZEC rally is, in essence, a vote of confidence in a future where individuals retain the right to financial self-sovereignty. However, this bullish momentum is perpetually checked by the skeptics' valid concerns. The existential threat of regulatory action and exchange delistings looms large, while the persistent challenge of driving real adoption for its shielded features remains. Ultimately, to analyze a Zcash rally is to analyze the tension at the heart of our digital age, the clash between the desire for freedom and the demand for control, between the individual's right to privacy and the state's pursuit of transparency. The price of ZEC, in its volatile swings, charts the ebb and flow of this crucial debate. A significant rally indicates that, at least for that moment, the market believes the freedom to transact privately is a right worth paying for.